Today, the Herculean effort of immunizing the American public is underway, and as a result, airline passengers might have a new unexpected traveling partner, the COVID-19 vaccine. Plus, last week's IPO market was red hot. Today, it's just red. Airbnb and DoorDash shares are losing ground, and other Silicon Valley startups are getting cold feet before committing to a public offering. And finally, Twitter gets slapped with a $500,000 fine for breaching European data regulations. I'm MacKenzie Sigalos, and this is CNBC After Hours. Stocks close in the green as the rollout of Pfizer and BioNTech's COVID-19 vaccine continues across America. It's an unabashedly hopeful and optimistic milestone for the country. After 9 months of restrictive quarantine measures, 16 million cases, and 300,000 deaths. And while today brought more good news on the vaccine front, Moderna's candidate, which is roughly 94% effective, passed a critical procedural step in the path toward FDA emergency approval. The country still faces a major logistical challenge in the effort to distribute available vaccines to every corner of the nation. I'm sure we all saw the video on Sunday of the UPS and FedEx trucks leaving the Pfizer plant in Michigan with the first doses of the vaccine. But they're not the only big corporations involved. United Airlines has started transporting COVID-19 vaccines in the belly of passenger jets. CNBC's LeBeau is on the ground at O'Hare Airport in Chicago with the details.
The commercial airlines will play a significant role in the distribution of COVID-19 vaccines. We are in the cargo terminal for United Airlines. This is where the first vaccines from Pfizer and BioNTech were brought into the United States. They were flown from Brussels here to Chicago. What we will see more of from the airlines is not only cargo flights where they can load up to 1 million, if not more, doses of a particular vaccine. We'll also see them putting vaccines on passenger flights in the belly of the airplanes for distribution to different spots around the United States, and there will also be some international distribution as well. What you're seeing with United Airlines is what we're going to be seeing with the other commercial airlines as well. They have hold facilities back here that they can hold those vaccines in for very short periods of time if they're moving them around from one location to another. They also are going to be allowed to pack extra dry ice around those vaccines. The FAA has given the commercial airlines guidance that they can put extra dry ice on those planes in order to keep shipments as cold as they need to be. The bottom line is that the airlines realize these vaccines need to go from point A to point B very quickly with as little downtime as possible, and they need to be kept at certain temperatures. And that's why they will be quickly moving through the process. If a flight is delayed, if a plane is on a tarmac because of weather, because of some mechanical issue, they will pull the vaccine off of that plane and then put it into storage or put it onto another flight so that it is moving as quickly as possible. The bottom line is that they don't want these vaccines to be sitting around. They can't afford to have them sitting around. I wouldn't say the airlines are getting rich off of Operation Warp Speed. They are being paid by the government to transport these vaccines, and because they have, if you will, some ability because of some of their aircraft to turn these vaccines around and move them as quickly as possible around the United States and both in and out of the United States, it certainly is helping them. But make no mistake, for the airlines, this is a tough time of year because the passenger business is down. United Airlines burning through more than $24 million every single day. It certainly helps that they can assist in moving these vaccines. They will be paid by Operation Warp Speed, but this is not a case where they're getting rich off of moving these vaccines.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
It's an economic war, and certain, when we went into World War II, a lot of industries were shut down, and everything went over to defense production. Well, we've shut down a lot of people in this particular induced recession, and others are prospering, and I think that the country owes it to the really millions of small business people.
I do think we're at a moment in time where there's a lot of euphoria. I personally am concerned about that. I don't think in the long run that's healthy. I think it will rebalance over time, as it always does. But I think there are a lot of great companies that really have extraordinary growth prospects that are going to continue to come to market.
This is a really unique combination, and we believe we can accomplish in the next 5 years what might have taken us 20 years to do otherwise.
When the pandemic first hit, we scaled the heck out of our business, going from 100,000 shoppers to almost 350,000 shoppers today to meet that demand. That has allowed us to really work with our retail partners and be well positioned going into the holiday season.
All right, call it an IPO hangover. Last week, high-profile tech offerings DoorDash and Airbnb partied hard in New York City. Both companies made their public debut, and both companies saw their stock skyrocket on opening day. DoorDash shares popped 86%, while Airbnb soared 112%. But now, those stocks are sinking. Each is roughly 20% lower than the highs on IPO day. The gangbusters' first day trading has left other startups in the queue to go public a little wary. Affirm, a fintech company that specializes in consumer loans, and Roblox, an online gaming platform, have both decided to postpone their own IPOs until next year. CNBC's Deirdre Bosa explains.
Well, I think the last week in the IPO market has been a surprise for almost everyone watching it. Companies, bankers, investors included. You saw these giant first day gains from Airbnb and DoorDash, which, by the way, already priced those IPOs above their initial range. And they're starting to be a feeling that perhaps too much of a good thing can be a little bit scary. So you've seen two other IPO candidates, Roblox and Affirm, pull back or at least postpone their IPO plans. Roblox saying that they want to understand what's going on in the market more, some of the dynamics, so that their own employees and users aren't disappointed. In a traditional IPO, you pay bankers a lot of money, millions, sometimes hundreds of millions of dollars, to get pricing right. They're supposed to go out and figure out what the market wants to pay for a company, what the valuation would be. Less than 10% of the company's total shares are actually available to public investors. And demand has just surged. It's been a hot IPO market, and you also have this new cohort of investors this year, the retail or the Robinhood investor that really wants to take part in those growth names. So there is this thinking that bankers behind DoorDash and Airbnb didn't account for the huge retail interest. And you know, there's debate. Is that their fault? Was it impossible to tell? We had Imran Khan, who led that huge Alibaba IPO back in 2014, say that this is exactly what they're paid to do. They should find out what all kinds of shareholders are willing to pay. And if you ignore the retail investors, you're not doing your job, and you shouldn't be earning that huge fee.
From my perspective, last few IPOs, the way they worked, it seems like epic level of incompetency from the bankers.
There are some drawbacks to seeing a huge pop on your first day of trading. It could make it more volatile in the future. There's also benefits. It could make it easier to sell stock in the future, to raise more capital. When you hear folks like Bill Gurley and Spencer Rascoff say that the IPO process is broken, they're mostly pointing to the money that they say is left on the table. The extra money raised above that initial IPO price for DoorDash and Airbnb, that goes to the institutional investors that bought in at the IPO price, instead of going towards the companies for them to use to grow their business, pay down debt, or however they want to use it. So Wall Street was blown away when Airbnb on its first day of trade was valued at close to $100 billion. Just this past summer, its valuation was taken down to $18 billion because it was part of this badly hit travel industry amid the pandemic. When you think that Airbnb at one point was worth more than all of the three major hotel chains, yet is losing money, and some people say it's simply just a platform. Remember that they don't actually own any physical assets. That's when Wall Street starts to think, how can it be worth this much? And you're actually seeing a lot of the analysts that cover these companies take a step back as well and say, maybe we have to downgrade them because the valuation is looking incredibly stretched.
Okay, time for today's numbers round. Let's kick it off with 30. Apple stock rose higher today after Japanese outlet Nikkei reported that the company will boost iPhone production by 30% in 2021. The report's sources claim that Apple will build around 96 million phones in the first 6 months of next year. Wall Street research firms like Wedbush say the report is another strong sign of iPhone 12 demand. Next, 120. Spotify shares have soared about 120% this year as the audio company doubles down on its podcast investments. Today, the Duke and Duchess of Sussex became the latest high-profile talent to sign with Spotify. Prince Harry and Meghan Markle agreed to a multi-year deal to host and produce podcasts for Spotify's platform. The financial terms of the deal were not disclosed, but Spotify has spent the year investing in an exclusive creator roster with names like Joe Rogan, Kim Kardashian West, and Barack and Michelle Obama. The first offering from Harry and Meghan, a holiday special hosted by the pair, will drop later this month. And finally, 547,000. Irish data regulators fined Twitter 450,000 euros, the equivalent of $547,000 US, for breaching Europe's sweeping privacy law called General Data Protection Regulation, or GDPR. It's the first instance of an American company getting hit with a financial penalty since GDPR was introduced in 2018. The fine comes just after our own regulatory board, the Federal Trade Commission, ordered Twitter, along with other social media companies like Snap, Reddit, Discord, Facebook, and YouTube, to provide details on how the companies collect and use personal data. And of course, there's the backdrop of the government's antitrust cases against Google and Facebook. The regulatory waters are getting rocky for America's biggest tech companies. Get all our coverage by going to CNBC.com and downloading the CNBC app. That's it for After Hours, but we'll be back here in our home office every Tuesday, Thursday, and Friday, so be sure to catch us then.